Good morning and welcome to the Killik Co market update. This week we've seen some continued weakness in emerging markets, and that's largely due to the situation in Turkey. Have a look here at this chart of the MSCI Emerging Markets Index over the last year, and as you can see it has been steadily declining since January this year, and in fact it's now lost over 20% of its value, which does put it into official bear market territory. Now there are a number of reasons for this decline, one of which is the fact that China accounts for over 30% of this index, and the fact that the US has imposed tariffs on China has caused this index to decline. We've also got a strengthening dollar and rising interest rates in the US, and that's put a bit of pressure on emerging economies that have borrowed money in dollars. And then more recently, the situation in Turkey has caused a further decline. So let's have a look at Turkey. Obviously, we have seen quite a severe weakening of the Turkish Lira over the past weeks and actually the past year. So here's a chart showing the Turkish Lira against the dollar over the last year. So as you can see, it's lost over 50% of its value, but that decline has really steepened over the last couple of weeks. And that's largely because the US has imposed sanctions on Turkey. That caused a concern, that caused a bit of a weakening in the lira, and then that led to concerns about rising inflation in Turkey. So inflation at Turkey in recent months has been running at over 20%. Now that the lira has weakened, because Turkey is quite a large importer, it means that goods they'll import will cost them more. That's going to push inflation up to an even higher level, and therefore we have a bit of a vicious circle. So that has caused concern for some investors. However, earlier this week, the Turkish finance minister did make a speech in which he said the central bank would do what it could to shore up the currency. However, he has said that he will not be raising interest rates or imposing capital controls. So I think some economists are quite doubtful about what else he could do. So given the situation in Turkey, how concerned should we be about contagion across other emerging markets? Well, first of all, let's have a look at how large a constituent Turkey is of the emerging markets index. So here's a chart here which gives you the different constituents and their weightings. As you can see, China is by far the largest with a weighting of just over 30%, but Turkey actually isn't even on this list. So that means that Turkey accounts for less than 1% of the emerging markets index, so it's really not a very large proportion at all. And something else to consider is the proportion that Turkey accounts for of global import demand. And that's currently about 1.5%, so not a particularly high level. And also a lot of that demand actually comes from Europe rather than other emerging markets currencies. So at the moment, it doesn't look as though the impact on other countries is going to be that severe in the short term, but it's definitely a situation to keep an eye on. And also this week, the ratings agency Fitch has released some fairly negative comments about the UK, and they've said they think it's increasingly likely that we will not reach a Brexit deal before March 2019. So that's caused a bit of a weakness in sterling. At the moment, we know Theresa May is touring around various different European countries trying to promote the Chequers deal, but we have seen a lot in the press about other countries responding quite negatively to this. At the moment, it's very difficult to say what the likelihood is of us reaching a deal, so we've had a quick look at the odds on Betfair. So these are decimal odds. The lower the number here, the more likely it is that people think a particular statement is true. So here we've got a Brexit deal will be approved before March 2019. They've given that odds of 1.57, which actually implies it is quite likely that we will reach a deal. They've then said there are odds of 4 on having another EU referendum before April 2019. So that implies they think that is quite unlikely. Now, obviously, these aren't the gospel truth, but they do give quite a good idea of general public opinion on this particular situation. So it's something that's quite fun to keep an eye on. Finally, this week, the Chinese regulator has imposed a temporary freeze on the approval of new gaming licenses. Now, yes, this is temporary, but it is still bad news for China, which is currently the largest gaming market in the world. And as a result, we have seen some weakness in the shares of Tencent, which is the largest gaming company in the world. So if you do have a stake in this, please do give us a call to talk about it in more detail. Now, moving on to the week ahead, still fairly quiet as we move through the summer, but we are looking forward to results from 3 different companies. The first is medical devices company Medtronic, the second is TJX, the owner of TK Maxx, and the third is the Chinese e-commerce giant Alibaba. That's it from us. Have a great weekend, and we'll see you next Friday.